The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
And we've got the S&P up 6.5 points. Dow's up 118. Nasdaq's down about 8. Nasdaq's pretty much at its first resistance level on the way up. Probably going to have a little bit of consolidation around these levels. My guess, though, is that we are not going to be pulling back anytime soon. And by soon, I mean Friday. My guess is that this market is going to act just like it has acted in the past few years, and that is it's going to run right up to the highs and wait. Either the earnings are going to be good and we're going to be a little bit higher, or there's going to be kind of a big gulp and we're going to go kind of lower. Kind of an air pocket out there. But that's what we're waiting for. But at least people on the street, the Wall Street insiders, they're living and dying by that old adage on the street. If you're not buying the highs, you're not trying. So today, anything exciting going on? Well, volume's about average. Are there any big signals? Not a whole lot. Again, as I said, whether it's the NASDAQ or the S&P 500, we're probably just going to hang out at these highs for a little bit. Now, tomorrow is the first day of, I wouldn't say it's the first day. It is the day that option market makers go delta neutral. That'll tell us a lot about what they think is going to happen in the next 7 trading days after that, actually. So we'll probably have a little bit more volatility. So maybe a little lower in the morning, a little higher in the afternoon, higher in the morning, lower in the afternoon, some kind of combination like that. And then we're going to probably just sit around that level until Friday morning. We start getting earnings. So a lot of hurry up and wait in the market. But other than that, not a lot of things that you can say are giant signals in the market that there isn't, flares going off. It's just kind of a very quiet market going into earnings in the summertime and volume kind of retreating. But at that same time, no big signals that I can say that the show is over, that it's time to hit those fire exits before everybody else does. Is one that is fairly bearish. I know that they can wait us out at least until Friday. If the earnings are good, my guess is volume will start coming in again. There is yet another big factor going on in the markets, and that is the Brexit issues and talks in Europe with two major governments that could fall in the next few weeks. Miss Merkel's in Germany, and of course, any moment we could see the same thing happening in England, in the UK, with Mrs. May. And both of these governments are basically ruling against the will of the elected, at least the majority. Most of these have one big major issue that they want to do differently than their subjects. And that's going to be kind of it. As long as both of those countries have weakness in the upper levels of its government, my guess is that any additional cash is going to flow out of Europe and into the U.S. and maybe a little bit into China. But people are worried that they may just, if the market went down, they just close their markets again for 6 months. You wouldn't be able to do anything with your cash. There's kind of a good feeling that they'll stop any big movement in the markets, but at the same time, would you rather have your cash over here in the United States where you could get it out, where we aren't going to just stop everything in the markets? So while a lot of people talk about cash flow, I can tell you about market psychology, and people would rather take a little bit less money and be able to get their cash at any time than know that there is no big giant gap below that instantly is going to be patched by closing the markets for 6 months or a year like China has done in the past. You can give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can always put a message in the den. But as I said, anything else changed? No, that's about it. We pulled back a little bit, kind of gave everybody a little bit of a heartbeat trimmer. But other than that, that's kind of about it. Well, let's do a little bit of history.
There it's all just a little bit of history repeating.
It is history repeating, and on this day, what did we have happening? Well, the Germans begin their first in a long series of bombing raids against Great Britain as the Battle of Britain begins. This will last 3.5 months. 120 German bombers and fighters struck a British shipping convoy that was well out in the channel, while 70 more bombers attacked dockyard installations in South Wales. Britain had far fewer fighters than the Germans, 600 to 1,300. It had a few advantages, though, as an effective radar system, which made the prospect of a German sneak attack unlikely. Britain also produced superior quality aircraft, and it just had to do with the Spitfire being able to turn quicker than the MEO 109s. Yes, how rude to bomb somebody in July. We were just getting ready for tea. The funny thing is that Hitler was at the very end of that bombing campaign, called it off because he was sure that the British had probably another 300 fighter planes ready to go and trained pilots than they actually did. They had gotten down to the point where if it had gone on maybe 3 or 4 more days, the Germans would have easily invaded after continuing bombing. But the head of the Air Force of Germany had basically said it was going to be a cakewalk, and they took massive losses. And, of course, Hitler was really thinking about what was going on in Russia, a much bigger problem. So he wanted to take all his boys over there on the Gulf and move them over to the Russian side of the problem. And that ended the Battle of Britain. But it started today in 1940, 3.5 months.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're still up 6 points in the S&P cash, up 114 in the Dow. Nasdaq's down 10. My guess is that we're going to kind of end up closing out probably flat on the day on the Nasdaq, maybe up just a little on the S&P. Again, probably some action tomorrow with everybody going delta neutral for expiration. Probably quiet Thursday, and then lots of action on Friday, depending on what we get in those earnings. We talked about it yesterday with earnings. If I can get this thing to come up. Come on, there he goes. And we'll just go through them again real quick. JP Morgan, Citigroup, Wells Fargo, PNC, Infosys. That's kind of the real start of it. Thursday night, we've got Fizz, National Beverage Company, but that's not going to move the market. And then, of course, after that, we're going to have some people start trying to interpolate what we find out on Friday into Monday with Bank of America, BlackRock, JB Hunt, BioAmerica, Netflix. After the bell is going to probably move the NASDAQ, my guess. And a lot of people, what they've been doing may or may not be working. And it's very tough to tell from the exterior part of Netflix what that is, because they don't publish a whole lot about who's watching what, where the money's flowing. In fact, this is one of those super opaque businesses that's always hard to figure out what's going on internally, but we can see that. Why don't we go ahead and start looking at Netflix, NFLX. Okay, let's do this. Get a little closer out here. Okay. So you've got $18 million shares. That's June 21st, 423.21. Don't expect this to back off before earnings on Monday night. Again, it may even go above this 223.21 before you get it. Again, there's not a lot of I want to say in the olden days, uh, when dinosaurs ruled the earth. Uh, and I started trading, which was 1998. So what is that? 20 years. In fact, it'll be 20 years in October that I went to full-time trading. But you've got, or you did have a thing where a lot of people started getting rumors about what earnings were going to look like. And you'd start seeing stocks fall out of bed long before, maybe 2, 3, 4 weeks before earnings. And you knew it was already coming. By the time it came, the stock was pretty much down to the level. It may drop a little bit more, but that was it. But I mean, a lot of people knew. With the laws and changes in 2010, where every CFO had to sign off on his books under perjury laws, and the CEOs could be found liable against their shareholders if they announced to somebody privately before they told everybody publicly about what was going on. And I think that's kind of done to the point where everybody just figures now there's no other choice. We'll just have to hold it into earnings if we want to hold long term. And that sets up for pretty much high fireworks. But again, not a lot of signals coming before earnings, other than the fact that they tend to just hang up here on light volume until it happens. A lot of stocks that you would just say, okay, if this was happening 2 months ago, I'd be all over trying to short Netflix. But with 1 week to go with earnings, the pattern is light volume. And let's just see how much closer we can get to this previous high. Maybe we'll go over that previous high, and we'll just kind of hold it there. So absent some kind of big movement, I think we're going to push it up there. Got a question already. Do we think we're going to go hit the previous highs in the NASDAQ? I mean, in the S&P. And is it IXI? Shoot. It's not that. It's no, I'll think of it here. What is it? RSI, RSP? Let's do the RSP. The RSP, the equal weight, RIDEX S&P 500 would be 107.01. Do I think that we're going to go up there and hit that? And the answer to that would be not before earnings. I don't think, unless we got some resolution with China, I think even resolutions with Europe would probably only give us a little bit with trade. But if we had China, that'll take us up to the 107.01, which is that January 26th high. And, we've had this long consolidation with this 104 area, at least in the RIDEX equal weight, RSP. That 104 area continues to be resistance. I don't think that anything in that is going to change before earnings. And 107 probably easily taken out if we make some kind of deal with the Chinese. Probably at least tied up there at 107 if we get the issues with Europe and trade handled. So got a little bit of stuff going on. Amazon's got their Prime Day coming up. A lot of free advertising on companies. One of the weird things, I was reading the news while I was gone on vacation. One of the interesting things that I found out is that CNBC has kind of been, if you wanted to figure out what the operators on Wall Street were doing, you'd watch and see what they went and did and said on CNBC. In 1993, they were the one-trick pony. You had Bloomberg Radio at the time, I think, but didn't have anything else. CNBC was it. It had some fairly spectacular viewership all the way, probably into about 2005 and 6. It's been sliding down since then. But the word or the news out of the cable business is that Fox Business News is now the go-to place to go to spout your wisdom and try to manipulate the market by giving it your opinion on the big stage. They are about 25% higher viewership than CNBC now. And I thought that was very interesting that it had changed so quickly in the last 6 months. I can come up with some reasons I think that answer is true, but it is different. Anyway, Amazon, what are we, 13 points from testing, 1763. That is the June 21st high. But my guess is we will hit that here probably within the next few days, maybe tomorrow. Be back in a minute.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Had a question about what options are telling us right now. And as I said, delta neutral tomorrow. So the options are going to tell us a great deal more than they tell us today. In fact, options haven't told us anything different in the last 7 days. So basically we're looking at, maybe 2780 on the cash is kind of the center point, maybe 2770, somewhere in that neighborhood. You always want to add just a little bit to what the options are telling you, because people do buy options hoping that they go unexercised. So there's always a little bit of a bias to the upside on the S&P and the spiders themselves. That's not so much of an issue in individual stocks, but you want to add 20 to 40 points on the cash, depending on how heavily everybody is short the market as a fudge factor higher for that, because they're basically not thinking that they will win. In fact, hoping they won't win. Some people are. So it always skews a little bit to the downside when you look at the bigger indexes than the actual close on expiration day, in this case, July the 20th. But we're kind of just a little over that, but not much. And tomorrow it'll probably vastly change. My bet is that they're going to go flat fairly far. That means that probably 30, 40 points higher to 30, 40 points lower is going to be rather flat in the curve for what money would be, or what these options are going to be like a week from this Friday. So, we'll see how those turn out. Whatever happens tomorrow is 10 times more important than what we actually are looking at today, though, in these options. So stay tuned. We'll talk about those. Had some other issues asking about what's going on in the sector oscillators that I've been working with for, a little over 9 months now. They basically are showing a great deal in the indexes of hitting its first high. Let's do this right now. And we just about, in the NASDAQ, have every single possible stock above its 9-day moving average right now in the NASDAQ, which is pretty huge. You can go back 3 years and not have that. So we have literally every stock kind of on the, at least to some kind of a smaller extent in a very short-term time frame, back at its high. Normally when they hit these highs, you'll pull back. You've got anywhere from 7 to 10 days where these things are going to hang out and try to go to higher highs. But when we hit these particular highs, you get a lot of times a little bit of a pullback. So would I be surprised to see the S&P down 20 or 25 points over the next few days? No big deal. But it depends on if we go higher tomorrow and try to bust out 2,800 on the S&P, then I suspect that we'll probably pull back on Thursday into earnings on Friday. If they go lower tomorrow, then I suspect Thursday will be a push higher back into these highs again. And until the market gives a very clear signal, I mean, we'd have to have some huge blowups in the financial sector and in the broker dealers on Friday. Even if we get some bad news, it's going to have to be backed up on what happens on Monday. If we get 2 days back to back, then you can start looking at your very longer downside targets on the S&P and the NASDAQ. The S&P is not quite as bad as this. And if you look down where my mouse is pointed at, this is the aggregated 9-day moving averages of all 102 stocks in the NASDAQ 100. Yes, I said 102 stocks. For those people who haven't gone and counted, if you got like an A and B shares that have a lot of weight in them, they actually have both. There may be 103 now. I can't remember last time I looked. Yeah, 103 stocks in the NASDAQ 100. The S&P 500, not quite as overbought, at least in the short term. Let's take a look at that one. Okay. But certainly not to all-time highs like the NASDAQ, which has blown through what we've had in the last 3 years for as many stocks, all above the 9-day moving average. Here we're just back to previous times when these things hit previous highs, and almost every time that I've gone back and looked at it in the last 10 years, if you hit these highs, you may have a pullback, but you're going to get one more attempt back at the highs yet again before these markets kind of roll over. So if you're bearish, I suspect that as we hit these highs, we pull back a little, either it's tomorrow or Thursday. The answer is going to be on Friday. If we go up to the highs, market rolls over again Friday, Monday, then you could see maybe that bearish long-term prospect show up. I just don't see it now. And at these highs, it has a tendency to be something like 5 to 10 days where you hang up out there before the market starts turning south. And I've seen no sign of that yet. So could we, I mean, you got two scenarios really. One, that we push up higher, we get no juice, and we finally fail at 2840 on the S&P cash, which is a possibility next week. The other possibility is that the earnings are good and we go up and blow out the 2840 in the next few days. And as I said earlier in the show, I just don't see that much information leakage that is making its way into the marketplace, giving us a lot of indications that there are people that stocks are going to miss or stocks are going to get their volumes kind of slowed down. But it's slowed down on both the up days and the down days for the most part in the broader market. So lighter volume all around, not a lot of clues. I like some certain positions I have, but for very short-term positions, not really thinking that it's a time to be throwing lots of money at the market. I did do one thing, and that is, if this is the end of the market, the last thing that's going to happen is some of these penny stocks are going to take off and double in the next few days to week, because that's always the last to run, is these stocks that no one thinks much about tend to be rolling. I added one of those today that I look as a perpetual option that never expires. It had the best pattern that I could find. It had a Gartley, and it had a great Wyckoff pattern. But other than that, I don't see a lot of risk reward being short or long the indexes at the moment. We'll be back in a minute.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we have a question in the den. It says, Apple, Microsoft, Google, Facebook, Amazon, Netflix report soon. Any idea what the stock prospects are with that coming info? I would say the first one we want to look at is Apple. It has, if there is a stock, or let me put it this way, if there was a company that had potential storm clouds of a vast change in its earnings forecast in the next year, I think it would be Apple. We've seen the highs hit in demand for smartphones. We've seen that people won't pay more than $1,000 for smartphones, and that is both Apple and with Samsung. So there is kind of a limit about what people are going to throw money at, and the fact that they're not that much different than the smartphone of a year and a half ago. So there's not that much of an upgrade cycle. Even with superior hardware from Samsung, they haven't been able to, its business is good. It's not like they're going broke. The thing is, though, at these prices, what are you expecting? And Apple, even with Buffett supporting it, may have the hardest business going forward, let's say in the next 6 months to a year, until they start getting something out that differentiates the product that they have now from something in the future, something that is a huge whiz bang that people just have to have. Apple also has maybe some issues just like Facebook and to a certain extent Google, where these guys have been kind of been a little bit of child molesters to your data, selling it to very sketchy people and not really caring that much about what they do with it. And Apple, there's at least some rumors that people are doing that. I noticed that the Congress, the House, also had a couple of people, maybe it was today, that were going to get grilled about what was going on with data from Facebook. Yeah, there is a little bit of that because they don't really differentiate between the data that your child has and the data that you provide to them on the website. They have some kind of things that they come back. I'm just saying that these guys really don't have any scruples. They're kind of like arms dealers. they'll sell to one side or the other. It doesn't really matter. They don't want to know. The big thing is how much revenues they can actually provide. And I think that's okay as long as they don't act as they do, which is that they are more virtuous than everyone else. You can't go out and claim virtue on all levels of political discourse and then literally sell to the highest bidder any data that you can get out to them. And they all apparently have done it. Google was selling, last week the news was Google came out, it was kind of buried in the 4th of July, but Google was selling literally everything in your email stream, keywords, to a lot of people that were doing it. Apple, I think the big news on them in the last couple of days was that they are recording lots of voice, even when you're not talking on your phone, to help them improve Siri and actually target their own advertising at you. Apple, we haven't seen them actually selling data to other people yet, and that's the only differentiation. But I think even just a little taint of that, along with the lower sales, makes Apple probably the most tough to take a look at in thinking that they couldn't have a fairly spectacular miss in the next quarter. Now, Buffett owns it. Can he keep the stock up? I mean, this is a pretty big stock. There's a lot of money. The question is, how much money is he willing to throw after bad money now that he's all in this knee deep? Long term, he's probably going to be fine. The question is he going to try to continue to manipulate the price of this stock higher? Options suggest that this could close at 180 a week from Friday. They haven't really moved. So this one kind of dipped into earnings options expiration last time. I suspect that it will also do the same this time. There just isn't that much coming in the next 2 quarters for Apple. Now, the other stocks of interest is Microsoft. They are launching a new kind of entry-level Surface tablet computer for about $400. By the time you get the add-ons in and the keyboard, you're probably talking $600. Read a lot of reviews about that this morning. Looks like an interesting product. I don't think that Microsoft has a lot of downside. I just don't understand where they got a lot of upside either. My guess is that this thing hangs around $100. Go with okay. Pokemon Go. I don't know why. All those things from Japan end up being kind of pet rocks, aren't they? They just kind of hang around for 3 months and go away. Okay. What else do we have? Google also has some huge issues, and that is that they are absolutely inundating ads on YouTube for those people, trying to force them into buying a subscription. I don't know how well this is going to work. And the question is somebody going to come by and offer an alternative to YouTube? Since you can scale something like YouTube fairly quickly, I think that these guys have the opportunity to see a door open, or the competitors or would-be competitors have an ability to see the door open. I would not be surprised to see Facebook really push into something with a product a lot more like YouTube, a lot less like Facebook, where you really just go back and look at it. But from ads from their own music service, which is a loser for everybody that gets involved in it, to their Red service, which is no ads. But the amount of ads is getting to be ludicrous, which tells me that it seems to me like Google either thinks they can get away with putting ads so thick that you can walk over them on YouTube, or they're trying to push people into these $10 a month segments so you don't see ads at all. That makes me think, just from people that I've talked to, nobody I know of has bought the red service. I wonder, is this a way to try to keep revenues higher? But the question is whether or not they show lower viewership in earnings. We'll be back to talk a little bit more about Google.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Thank God for them internets.
Well, you can thank God for those internets. But as we said, Google, fairly light volume coming back into its previous highs. There's just not a lot good that you can say about the growth of Google. I don't see where they're going to have any kind of breakout new product that brings them a lot, any kind of acquisition that changes what's going on. And that's probably the big problem it has. I don't know if it's getting into the government is going to be any bigger issue for them in the future. But the question is whether or not they can just through sheer will count ads on YouTube that no one's watching. But maybe that turns into money. Maybe it doesn't. Now, one of the things I did do last week was work on a new type of machine learning. and it actually is it goes through and tackles the problem of what people actually are clicking on and whether or not those are real clicks or fake clicks by machines. There's some fairly decent ways that you can tell about it, and it had nothing to do with me, just happened to do with the classes on machine learning. But it was a very interesting problem, but they're going to be much better at figuring out ways to tell whether or not people are actually watching on the other side. Right now, I guess, 1999, the dot craze really started. And by the end of 1999, it doesn't matter how much money they make. It's all about eyeballs. And then we figured out that 9/10 of all the clicks were fake. And it really didn't mean much of anything. And I guess that's it. Can they actually put a good number on Google's click-throughs? And there is some technology that looks like they could do it. My guess would be that it's probably highly inflated on Google. So thank God for them internets. We'll talk more about tech stocks tomorrow. As I said, I think we've got till Friday to have a feedback.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.